Welcome back to episode 4 of the Engineered Impact Podcast. I'm your host, Dan Korth. In the last episode, I shared a series of what felt like discoveries to me that ultimately led me to stop contributing to my company's 401k plan. I kind of shared what all those things were. I embarked on this adventure to go figure out what to do with my money instead, right? So just to recap, if you weren't with us last time, the bottom line is that I started to realize that most of the typical selling points for putting my savings into a 401k were actually pretty huge risks to my prosperity now and in the future. So quick reminder, here are the big things that turned me off to the 401k. Okay. First off, I had no control. My money was locked away. I couldn't touch it for decades, right? Didn't matter if I had a family emergency. It didn't matter if I wanted to start a business or I needed to buy a new vehicle or I just wanted to go on vacation. I couldn't access what was supposedly my money without raising my hand like a school kid and asking for permission from my company and the IRS. And then they would decide if I could take anything out and how much I got, right? I hated that. Once my money was in the 401k, it was locked up. My only options were to speculate in the stock and bond markets, right? Now, sometimes that's great. Sometimes those asset classes are doing awesome, but other times they're not. Right now, it's the beginning of 2020. They're not doing so hot, right? There are times where housing is doing awesome or precious metals are doing awesome or whatever. There are other asset classes, but I couldn't participate in those. If those were doing well and stocks and bonds weren't, my money was trapped in the stock and bond markets, right? Didn't like that. Even within those asset classes, like my company says, here's a dozen funds that you can go invest in. And that's it. I'm stuck, right? I don't have any control over which companies they're investing in, which bonds they're buying. You know, for all I know, they're buying the bonds of a bankrupt government, and there's nothing I can do about it, right? That's my fund. That's stupid. Like, I should be able to put my money where I think it's going to be put to the best use, right? I found out I was going to have an enormous tax liability when I could least afford it in retirement, right? So the deal was I was going to do all the work for 30 or 40 years. I was going to put up all the capital for 30 or 40 years. I was going to take all the risk along the way of the ups and downs of the market. And then at the end of the day, when it comes time for me to enjoy the fruits of my labor, I've got to go be taxed at some unknown rate in the future, which I'm guessing is probably going to be higher, but I'm not going to know how high until it's time to go cash it in, right? The IRS isn't going to disclose that because they don't know. That seemed kind of silly to me. It just didn't seem like a good bet. And on top of that, I realized that, again, my future well-being was at most an afterthought in the design of this whole 401k thing to begin with, right? My 401k was going to make my company rich because they didn't have to give me a pension anymore. It was going to make Wall Street rich because I got to take fees off the top for 30 or 40 years. And it was going to make the government rich because they could take as much as they wanted before I ever saw a penny, right? There's no design for me to get rich in this. There's no design for me to even come out okay on the other end of this, right? Whatever's left over is a happy accident. I don't want to bank my future on a happy accident, right? And then finally, I also shared, at the time, so for me, this was back in kind of the 2010, 2011 timeframe, a lot of countries around the world were still struggling with the aftermath of the Great Recession. And I saw multiple countries that were confiscating private retirement funds like 401ks, right? Their citizens' equivalent of a qualified retirement plan. They were just taking it because they were broke and they were the government and they could do it. And there was nothing anybody could do to stop them. Now, I hope that's not going to happen in the U.S., but, when I look at a country that's 23, 24, 25, however many trillions of dollars we have, we just created like another 6 to fight this COVID-19 pandemic. How many $20 trillion of debt the United States have? When I look at the $30 trillion that are sitting in qualified retirement plans, that's got to be a tempting target if things get in a pinch, right? So, again, you can call that conspiracy theory. I don't want to bank my future on that possibility, right? So no access to my money, minimal investment options, enormous tax liability, questionable and uncertain security in the future, and the possibility that I could scrimp, save my whole life, only to have a panicked bureaucrat steal it all at the end. That just didn't sound like a good idea to me. That didn't sound like what I wanted to bank my future prosperity on, right? So, in our desire to be financially free, my wife and I packed our financial bags and made the very difficult decision to stop contributing to our 401k. And quite honestly, even knowing all the things I knew, even having learned all this stuff, it was one of the scariest decisions I've ever made. I mean, sitting there trying to get myself to erase my contribution on the website and put zero to walk away from the company's match. That was hard. And it was made harder by the fact that everyone I shared this with told me I was an idiot, and reminded me of all of these things that I was giving up if I did it. And so even though I knew all the stuff I knew, that's hard. It's hard to go against the grain. And especially hard when you have no idea what you're going to go do instead. Like people would say, well, what are you going to do with your money? I didn't have an answer for it. I just knew that wasn't it. That wasn't going to get me where I wanted to go. And there had to be something else out there. I looked at the world around. There are rich people all over the place. And I was pretty sure that Bill Gates and Warren Buffett and even people much less, with much smaller net worths, I was pretty sure they weren't putting their money in a 401k. And so I knew there had to be something else out there. I had no idea what it was. So, like I said, we packed our financial bags. We walked away from our 401k. And I started researching. I trying to figure out what other savings opportunities were there out there, right? Now, obviously, I'd already very familiar with things like savings accounts and CDs and money market accounts, and those were garbage because interest rates were in the floor. They were like zero at the time. So I knew that wasn't going to do it. So I just started trying to figure out what was out there, right? What would give me the growth and the security, the control, the tax savings that I knew I was going to need to build the kind of financial freedom we wanted, to have the quality of life that we wanted, and the certainty that it was going to be there for us when we needed it. So as I started learning, I was very quickly introduced to a concept called infinite banking, which claimed to use a specially structured whole life insurance policy to provide pretty much everything I was looking for. Now, if you're a Dave Ramsey fan, I know the hair on the back of your neck is standing up because I just said whole life insurance. And he hates that. He rails against it, and so does most other, financial pundits. So, when I started looking at it, when I first encountered it, I didn't know a lot about whole life, but I'd heard it was, a scam or a ripoff or kind of a bad thing. But the person that introduced me to it was somebody I trust. I'd actually paid them to help me understand how the wealthy invest. And so I was like, all right, I can't reject this right off the bat. I got to look into this, right? It was something that he was doing, and so I figured I had to give it a fair shake. So I read a book on the strategy. I learned what I could about it. I went so far as to talk to an agent a couple of times and start talking numbers. We started to structure what a policy might look like. And quite honestly, it sounded incredible. The guy that I met with was really cool. He was young like me. He promised that, doing this, it would give me the growth, it would give me security, I'd be able to have access to my money when I wanted it. It was a private account, good tax benefits. It sounded phenomenal, and I really wanted to jump in. Now I'm a spreadsheet nerd, right? Typical engineer. And like a good engineer, I'm also very skeptical. And so when it comes to outside the box thinking around money, the concept sounded cool, the numbers sounded compelling, but in the end I was like, this just sounds too good to be true. And as the adage says, if it sounds too good to be true, it probably is. So I convinced myself I didn't want to be suckered, and I walked away. Now, I still had no idea what I was going to go do, so I kept looking around, right? And over the course of the next 2 years, I learned everything I could about money, about investing, about economics, and I threw in an unhealthy dose of politics just because. I did everything. I read blogs, I read books, I watched YouTube videos, I talked to everybody I could. I subscribed to newsletter after newsletter. I got courses and programs and all these things to try and find something that would help me feel confident and certain in my financial future. So I was taking all this stuff I was learning, and I tried my hand at investing in precious metals, and I absolutely lost my shirt. I tried investing in stocks, and I only lost my socks and maybe a pant leg on those. I explored bonds, I explored trading options, currency trading. I mean, anything I could find, real estate strategies. I was trying to find whatever's out there in the financial universe and find something that was going to help me feel confident that I could become financially free. And I read and I watched and I listened to everything I could. And while I started getting a lot smarter. I mean, I was learning a lot of concepts. I was learning a lot of strategies. I could talk the talk, and I was, industry jargon was starting to come more natural to me. But financially, it didn't feel like we were getting anywhere. We were still saving all we could. We were still sacrificing and going without a lot of things that we would have liked. It just never seemed to amount to anything. Anytime we'd get a few dollars together, I'd either invest it in, whatever I was studying at the time, with very mediocre results. Sometimes I'd make money, most of the time I didn't. Or I'd buy, yet another course, another advisory service or whatever, just hoping that new thing would be the thing that would make the difference. And it never was. Just no matter what I did, no matter how much I learned, no matter how much I invested, nothing felt any different. Nothing was giving me any kind of confidence. Well, over the course of these 2 years, as I'm learning all this stuff from all these different places, something interesting happened. And that was, I kept running across this infinite banking concept every once in a while. And everybody called it something different. Infinite banking, it turned out, was just one guy's name for a strategy using these whole life policies. So everybody called it something different, but as I'd start to look into it, I'd realize it was the same strategy. I also encountered a lot of other people's opinions about the strategy. I heard Dave Ramsey call whole life insurance companies the payday lenders of the middle class, and, all of his arguments against it. And I listened, I paid attention. I figured he's a smart guy. He's helped a lot of people. There's probably a reason he says that. But again, I kept running across this strategy from different people, and they were people that whose opinions I respected. There were people I'd followed. There were people I had paid to teach me about finance and investing. And so eventually I thought, there's got to be something to this. Part of that was I felt like I was out of options, and really was no better off than I'd been 2 years earlier when I started this whole mess. So I figured, if all these people are all coming back to the same strategy, and all of them are wealthy. I mean, these are the kind of wealthy people I knew were out there that weren't investing in 401ks, that had to be doing something else. Well, a lot of them, this seemed to be the other thing that they were doing. And so eventually I'm like, all right, I got to take another look at this. So I did. And, quite honestly, I was blown away. Particularly having looked into and tried just about everything else, and seen it fail. I think I came to it with a much more open mind. I came to it with a heck of a lot more financial education. And so again, I read up on it, learned everything I could, and then I started talking to agents again. This time I talked to different agents that kind of had different spins on it. And absolutely loved what I was finding. Just kind of high level, what the strategy offered was consistent 4 to 5% growth every single year, completely insulated from the ups and downs of the stock market. It would give me access to my savings anytime I wanted it for any reason. I would pay taxes before I put the money into my policy, but that was it. I would never pay taxes on it again. I didn't have to pay taxes when I took it out. I didn't have to pay taxes every year as I earned that interest in dividends. Never. Tax-free. I'd be putting my money to work with the most secure financial institutions on the planet, which was a huge deal to me. My money would be private. My money would be protected from lawsuits. And we talked a little bit about the potential to even leverage my money, or the money that I put to work in the insurance company, to put the same dollars to work in two different places. And I didn't really understand that at first, but it sounded really cool. have $1 earning returns in two different places. That sounded pretty cool. And so I was like, all right, this sounds pretty awesome. I think I want to check this out, right? Now, for starters, if you look at a legitimate 4 to 5% compound interest growth curve over 40 years, that's impressive, right? That's the eighth wonder of the world that everybody always talks about, right? And that's what they pitch you when you sit down with a financial advisor and talk about what a 401k is supposed to do, right? It's supposed to be this compound interest curve. But what I found is that earning 5% for real compared to earning 8 to 12% average returns in the market are two very different things. And believe it or not, I've done the math. I've mapped this out. Believe it or not, oftentimes earning a reliable 5% compared to an average 8 to 12%, you'll win with the 5% often. Okay. And a big part of that is that 8 to 12% average returns doesn't mean 8 to 12% compounding growth. That means ups, downs over time works out to 8 to 12%, but that's not how the math actually works out. Plus, there's the reality check that even if the market is earning 8 to 12%, the average person participating in the market is not earning anywhere near that, right? So that 4 to 5% sounded pretty good to me. But not only was the strategy offering me good growth, control over my money, access, liquidity, security, the tax savings I was looking for. Again, there was this thing hanging out there that I could potentially supercharge my returns by putting $1 to work in two places, right? So I was like, all right, we're going to do this. So we created a policy. Finally met an agent that I felt, could meet me where I was financially and set up a policy that was going to work for us. We started funding it, and this crazy thing happened. Our money actually started to grow. After all of these things we tried, nothing worked. I was like, holy cow, our balance is actually going up. Like every year, this is working, right? And what was happening is having all our money in one place instead of scattered all over the place, knowing exactly where we were going to put it every 2 weeks when our paychecks came, just led to less leaks. There were no market losses. There were no, there was no question when the money came in. It just went into the policy, and it started to grow and do exactly what it was supposed to do. Okay. So after taking a couple of years to build up capital, get our feet wet with the policy, I really started to, I wanted to start exploring this double return thing that I'd been told I could take advantage of. Right. So I learned a little bit more, and the deal was, as a policy holder, I could take a policy loan from the insurance company of the insurance company's money, right? So my money would still be in my policy. It would still be growing at 4 to 5%, right? Because my money wasn't coming out. The insurance company was going to loan me their money, right? Then I could take the money from that loan and invest it in another asset and earn a second return, right? So I'm earning interest and dividends in my policy, plus I'm earning whatever return I can get on whatever asset, right? And this, like, as I'm talking about, this is when my head started to explode, right? So I had a friend that was doing this, and he's explaining this to me because it didn't make sense to me. It didn't register that this was legitimate. So, we're talking about this, and I'm like, okay, wait. So I still earn my full interest and dividends on what's in the policy. Everything I've put into it, still earning 4 to 5%. Right. Okay. So then you're telling me I get to use the insurance company's money to go invest in something else, anything else I want. I don't have to use any of my own money. Correct. Then I can take the returns from whatever I decide to invest in, whatever that other asset is, stocks or real estate or whatever, and I get to use the returns from that to pay the insurance company back, pay back that loan I took. Correct. And then they'll let me do it again? Yeah. Whenever I want. Yep. As many times as I want. Yep. I'm like, are you kidding me? Like, this is awesome, right? Are you starting to see the power in this? Guys, this is how the rich get richer, right? It's not that they're stealing money. It's not that they're doing some corrupt secret thing. I mean, sure, some of them are, right? The banks are corrupt as can be, but most of the wealthy people in America, most of the wealthy people in the world, they're not doing anything corrupt. They're not stealing money. They just know stuff most of us don't know. They're just using different tools than us, right? You can't do this kind of stuff with a 401k. So the wealthy don't use 401ks. Um, they can do this stuff only because they learn how to do it, right? Most of us don't do it only because we never dare to think that there might be something outside this sorry excuse for a retirement account that our HR rep presented to us on our first day on the job, and we didn't know any better, right? And everybody else is doing it, and so we do it, and we just keep doing it because that's what you're supposed to do, right? We don't take the time to think, gosh, maybe there is something else out there. Maybe this rich guy over there is doing something I'm not doing, that he knows something I don't know, right? Most of us don't. We just don't allow ourselves to go there. But here's the thing, guys. You can use the exact same tools. You can use the exact same strategies that the wealthy use. You can do the same things. You can get the same kinds of returns. You can get the same kind of income. You can get the tax advantages, the growth, and the satisfaction from actually putting your money to work doing something productive, just like the wealthy do, right? Now, I don't want to go into any more detail today. That my head exploded when I learned this stuff. I hope your head is exploding, and I hope you're super curious to learn how to do this. And we're going to talk a lot about this stuff, right? But what I want you to walk away with today is I want this to sink in. Okay, you can do exactly what the wealthy do. You can become financially free way faster than you think you can if you will just take the time, make the investment to learn the tools that the wealthy use, learn the strategies that the wealthy use, and then have the courage to just implement what other successful people have done, right? It's not rocket science. It's just finding someone successful and modeling what they've done. And it's awesome, right? So I'm going to wrap it up for today. Next time we'll talk about kind of how my wife and I decided to implement this plan and how that's working out. But I hope this has started to open your mind to a new possibility. And we'll catch up next time. Have a great day,